GEM International is a new diamond explorer in the richest diamond producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. GEM International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Ted Dixon, CEO and co-founder of IncResearch.ca, Canada's first online financial news and research service. Welcome back to the show, Ted.
Well, it's great to be back, Jim. It looks like we've got another wild day in summer markets with rumors and expectations swirling around on the back of what could have been nothing more than a summer visit to Tokyo by Ben Bernanke, but apparently there was more to it than just going to visit the shrines in Kyoto and seeing the sights in Tokyo. Apparently, he met with Shinzo Abe, the Prime Minister of Japan, and also the officials at the Bank of Japan, and they were having some discussions about new forms of monetary stimulus.
Right, and when they say new forms, is that going to be giving people gift vouchers? Because I heard that was one of the plans they were going to do in Japan. Instead of bailing out banks, they were going to give money directly to consumers to spend.
Well, I don't know if Ben Bernanke took a helicopter over to Japan, but he may have, and he may be leaving it though with Shinzo Abe and Haruhiko Kuroda, who is the central bank governor. And I don't even want to call it expectations, but certainly one of the thoughts or rumors going about is that they will either do some sort of direct payment, but more likely in the case of Japan, it will be some sort of monetary maneuver to help the government finance another binge of infrastructure spending. So essentially, the Bank of Japan monetizing a net debt issuance by the government, and how the mechanics of that would work remains to be seen. But we're all waiting. There is a Bank of Japan meeting towards the end of this month, and we're all waiting, and everyone's expecting them to do something. So this meeting with Ben Bernanke has really got the market flying today, unless you're in gold stocks, and they were due for a pullback. Our insiders have been bracing for a pullback, a seasonal pullback in gold. So today is one day where we seem to be getting it, because what's happening, Jim, is that as these rumors are flying around, the bond market is selling off, and so bond yields are going back up. And in many cases, investors will look at bond yields and compare that to the zero interest rate associated with gold, sell gold and buy bonds. Although, to be frank, I think the short-term rates are more important than the long-term rates. But gold was due for a pullback, and we're getting one today. And a lot has to play out here in terms of what is going to happen out of Japan, and Japan will be the experiment here. It seems if they can do something different that is deemed to be working, then other central banks could follow. What looks to be dead in the water now, and this may be another reason why gold is having a bit of some headwinds here, is this negative interest rate recipe that some of these central banks have used. It's just been a total disaster, and I don't know how you can still see some of these guys and gals get on TV and make speeches saying how it's working. Well, it's not working. Mario Draghi is helping to destroy the banking industry in Europe as we speak with his negative interest rate policy. So how this is all positive for the European economy, I have no idea. But I'm sure they can explain it in some ways. But the bottom line is, I think even central bankers know this negative interest rate idea is not going to fly anymore. And the other problem they had, of course, was QE, quantitative easing, which helped all the rich, asset-rich players in the world, helped the banks, helped the investment banks. I mean, there's some of the same players that helped us get into this mess, and voters have caught on to that. They caught on to that in England. And they're starting to scratch their heads and go, wait a minute, why are you doing these policies that help, the very well-positioned in society, and what about when does it trickle down to the average taxpayer? Well, that hasn't trickled down. It's trickled down to those who own assets. But if you're in the in that large segment of Canadian and Western industrial society where you aren't asset rich, aside from maybe your house, which you may or may not have a mortgage on, but half the people in Vancouver rent. So, there are a lot of people who were being totally left behind by this quantitative easing program, and it was bringing up real issues of inequality. I mean, just look here in Vancouver, how we've had this massive hyperinflation in real estate. I mean, who is this benefiting? Well, initially it benefited a lot of people who own homes, but as it spiraled out of control, the only people who were possibly benefiting are those who were in a position to exit the market. If you wanted to trade up, you were being totally priced out from what you wanted to trade up to, and you had, instead of trading up, you were trading out of, going out of the city. This high density take public transit formula, which for some reason a lot of our policymakers seem to have embraced. It's a nice marketing push by the real estate industry, and I don't begrudge them for doing that. I mean, why wouldn't they work in their best interests here in this market? But people can no longer trade up in Vancouver. They have to trade out. And this is all part of this whole thrust that's been pushed by central banks around the world to promote asset inflation. Well, we've got it. And Vancouver is where, the storm hit the hardest. So central bankers, I think, have kind of come to the conclusion, well, maybe we have to try something different. And now we're either going to get this helicopter easing where everyone gets some money, or targeted lending by the central bank. And it looks like in Japan's case that could very well be targeted lending to infrastructure binge. So we will see how this plays out. This is, as I mentioned, this is very bond unfriendly if it happens, and that has major implications for the Vancouver real estate market as well. If gold's starting to take a hit here, you can bet that real estate won't be too far behind. So we'll have to see if this is more than a one-day wonder that's given markets a chance to correct. Gold stocks have more than doubled so far this year, so they were due for a pullback. So this could all be just an excuse to unwind some positions, or it could be the start of something new. And of course, we may have to wait for the Bank of Japan to play its hand before we really know.
Well, I've seen headlines now, Swiss and Japanese 50-year bonds negative. They don't expect to have positive interest rates, it seems, forever.
Well, if they do helicopter easing, that may change. The problem in the Japanese bond market, of course, is the size of the market being held by the Bank of Japan. And, now it's in their interest at this point, in the Bank of Japan's interest, actually, to keep those rates low, because if they start to rise and they have to theoretically mark their holdings to market, they would suffer huge losses. But of course, there's always tricks that regulators can play in their own self-interest to, change the rules. So, we'll have to see. We'll have to see. I think it's naive to think that they could get their 2% inflation target without a boost in yields. And I'm sure the Bank of Japan is well aware of that. And these will be some of the questions that market participants will have going forward. That's why I do have a belief that it's probably a little early to write off gold at this point. I think it's been due for a correction, but let's see how this all plays out and what the risks are associated with these new measures that may or may not take place. But certainly markets are expecting something now.
We'll have more with Ted Dixon right after the break.
GEM International is a new diamond explorer in the richest diamond producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. GEM International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
I'm Larry Ray, President and CEO of American Manganese Inc., listed on the TSX Venture, ticker symbol AMY, AMY, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Ted Dixon. Ted, the Dow Industrial Average reached a record high today, and people are expecting more highs. Is this one of the rare summers where people might have made a mistake if they did the usual sell in May and go away?
Well, our Canadian Insider Index, which tracks 50 growth and value stocks preferred by insiders in Canada, it's also made a 52-week high this week, 2 days in a row. And certainly it's been a pleasant surprise for those who have hung on. We'll have to see how this plays out. Again, there's a lot of positive expectations now that there will be a silver bullet that the central bank can deliver. I'm not so sure it's going to play out that way. We also have a run-up now to the GOP convention where Donald Trump will be nominated at the end of the month. And we'll have to see if markets can make their way through that. And usually around some uncertainty, political uncertainty, markets tend to get a little jittery. But so far, they've been weathering the Trump and Trump-Clinton storms pretty well. The prospect of a Trump presidency doesn't seem to be taken too seriously by the market right now, and certainly the problems that Hillary Clinton had with her emails didn't seem to faze the market one bit. So, but once the conventions start to take place, we will maybe see a little bit more attention being paid. There has been a fair amount of civil unrest in the United States. We'll have to see if that calms down here. And, was it just an unfortunate set of circumstances last week that led to the problems we saw in Dallas and in other places, or is this the beginning of something a bit bigger? So if the markets can get through the Republican National Convention, which this year is scheduled between July 18th and 21st, then maybe we'll have a strong run into Labor Day.
Well, perhaps these demonstrations and disturbances in the U.S. have little less to do with police violence, either against cops or by police, but more to do with their economic situation, with the International Monetary Fund telling us that the gap between the rich in the U.S. and the average person is increasingly widening, and that could be leading to tension.
Well, again, this comes back to the choices that policymakers have made in the United States and other countries to rely on monetary policy to fix all their problems. and it can't do it. Monetary policy is a, to use central bankers' terms, is a blunt instrument, and they when they try and push more money into the system, some people benefit and some people lose. So this is really a political problem. I think it's been simmering for a while, but so far, it hasn't. Aside from the the tragic deaths of the people involved, of course, it's been making TV news a lot. But whether it starts to infect the national psyche, I don't think we're there yet, and I'd be surprised if we do. But it is certainly one of those potential surprises into the summer that it's worth keeping an eye on. And I think what better place to manifest itself than the Republican convention in Cleveland, if there is that type of a mood swing happening in the country.
You mentioned before we went on air that the Canadian and Australian dollars are enjoying good times.
Well, if you're going to spend billions and billions and billions and billions and billions of dollars on infrastructure, which you may or may not need, that's going to require a lot of copper, and it's going to require a lot of oil, and it's going to require a lot of stuff. So I think that's why you've got a bit of a sympathy move here on both the resource labeled currencies. Now, I do believe that the Canadian dollar is overly tagged with the oil label. Foreign exchange traders have an attention span of usually about 30 minutes. And so it's a nice idea for them to grasp onto. But when you look at the amount of dollars that we know of that are flowing into the Vancouver real estate market alone, just by what's been declared by the recent numbers released by the finance department here in British Columbia, you begin to realize, well, wait a minute, we're not just exporting oil out of Canada. We do export cars, we do export car parts, and we do export aircraft components, but we also export real estate, and that's been a big ticket item. I'm sure it continues to be a big ticket item. So the Canadian dollar never got really down to the doomsday levels that people were talking about. Yeah, I think it touched 69 cents briefly. That was a huge buying opportunity, and there was all sorts of calls for it to go to 65. I even heard someone it's going to get down to 55. You heard all of that last year and earlier this year. But I just don't see it, because the Canadian economy is more diversified than these foreign exchange traders will ever understand. And if the real estate sector begins to wobble, well, it's likely because the real economy is starting to pick up, and that means your aerospace and your autos and your oil and gas industries will pick up. So we have a pretty diversified economy in Canada, more than people give it credit for in any event. I know there's an argument that it should be even more diversified, and that's a discussion for another day. And I would agree that we have a lot of work to do, but it's not a one-trick pony by any stretch of the imagination.
Well, they're also expecting the demand for oil to continue to rise. Even though the world economy might be slowing down, it still does need more oil, and people haven't made the major switch to using electric vehicles yet.
Well, that's right. I think it's coming, and I think the last thing that Canadians, and particularly the province of Alberta, should do is become complacent that we see rebound here, that everything's fine. I don't think everything is fine. I think the trend is pretty much set in that, you want to call it 10 years, 50 years from now, that gasoline vehicles will either be in the minority, or certainly the consumption that's involved with powering one of those vehicles using hydrocarbons is going to be substantially lower than it is today. So, the key drivers of oil demand are going to be China and India. If these new vehicles become competitive and available in these countries, well, then the secular trend will be not your friend in the oil and gas industry. That's for sure.
How big of a player is India right now? We heard about China's economy slowing down. Is India's?
Well, India's is growing, but they've got a number of structural problems that they have to address. Corruption is not the least of them, but also just bureaucracy. I would throw that in with corruption, and just rules and regulations, and it's a very protected economy. So they've got a ways to go to really open up their jets, but they've been outperforming China recently, and we'll just see if they can sustain it and what kind of quality of growth it is. I mean, they're certainly at much further behind China in terms of development, but that means there's a lot further to go in terms of improvement. So they seem to be moving in the right direction. We'll just have to hope that their reform process continues. At least from our perspective, it would be a good thing to see them open up more to more foreign investment and participation in their economy, so that then their per capita incomes would really start to take off. The one thing India can do that many countries didn't, and that is if they do open up their markets, they have the opportunity to help compensate those who lose from an open market, more open approach. And I think that's been the root of a lot of the problems that we're seeing in the United States and to some degree the United Kingdom as well. But that we will see. They're a democracy. There's probably an incentive for political players to recognize this, and they do have a chance to get it right. So hopefully they'll be making hopefully they won't be dragging their feet too long in opening up their markets to let fuel some stronger growth.
Ted, thank you so much for chatting with us.
It's great to be here.
My guest has been Ted Dixon, CEO and co-founder of IncResearch.ca, Canada's first online financial news and research service. You're listening to HowStreet.com Radio. Find us on Twitter at Talk Digital Net. Our popular YouTube channel is Talk Digital Network. Questions for the show can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com Radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com Radio is a production of HowStreet Media Incorporated.